Hi folks, Dr. Rowe here. Excuse the rather tired and somewhat gristly look, semi-lockdown, although we're sort of out of lockdown. I don't know if we are we? I wanted to just do an end of day video. I didn't get a chance to do one yesterday. Life has been rather manic for the last 48 hours. I'll see if I can update you on that. Actually, there's a question I want to address on this subject as well for those of you that do property investing, but that's another video maybe for tomorrow. I just thought I'd do this live to wrap up the day because it is Money Week number 2 and there's a few more subjects I wanted to address before we come to the end of the theme. And if you haven't watched the other money videos, do go look at those because I think there might be some valuable tips in there that you might want to consider. So I want to address the subject of cash flow forecasting, and it's something that certainly when I've sat with people in the past, hey Harjit, how you doing? Good to see you. Thanks a lot, I look fine. I feel knackered. Long story, I'll go into it maybe in the video tomorrow. So yeah, the question is really that, and I used to run 3-day programs called Re-Engineering Your Future. And we did a day on time management, we did a day on money management, and we used to do a day on communication. Obviously now we have the whole CWI program, which is incredible, excited, and that's being launched very soon, by the way. The online program's being launched, I should say, so keep your eyes out for that. Forecasting. I have 2 questions, right? Are you cash flow forecasting on your personal life? And are you cash flow forecasting on your business? Now, if I ask that question to the average person that runs a business, most people will actually say, yeah, I'm doing a form of cash flow forecasting on my business, but they don't necessarily do it on their personal life. I just want to clarify what I mean by cash flow forecasting. So if you're, and this is just me simplifying, and remember, you've got to seek financial advice. This is not meant to be advice whilst I'm doing these recordings, so there's a little bit of a caveat there. If there's anything I say that you're not sure about, that you go check up with an independent financial advisor if you've got any concerns over this. But essentially, when people talk about a cash flow calculation, that's different to cash flow forecasting. So an example, if you're a property investor, for example, and you do a cash flow calculation, that is an instant look at your financial cash flow at this moment. So you might say, for example, on that property, we have £4,000 coming in because it's maybe a large HMO, and we have £2,000 going out. So the net cash flow is £2,000 a month. If you did an instant snapshot cash flow forecast on your business, it might be that you have multiple clients on average bringing in 7,500 and your business has outgoings of 5,500, so it has a net positive cash flow that month of 2,000 in that example. Cash flow forecasting is very, very valuable, and it's different because it allows you to look into the future and now look at where you anticipate the financial status of the business to be in a month, 2 months, 5 months, 6 months, 12 months, 18 months, 24 months down the line, depending on what spreads you're looking at. So, I mean, typically you want to be going out at least 12 months. So on a personal level, the reason this is hugely beneficial is because it allows you to look out for any possible pitfalls. What a cash flow forecast should have typically is, and I do this is how I lay mine out, on the top part of the cash flow forecast is income, and on the lower part of the cash flow forecast is expenses. And then when I talk about income, I will look at multiple sources of income which I have coming in, and then I will look at my outgoing expenses all going out. And so you need to categorize these. And if you want to really go into detail, then you start to look at what's called fixed and variable expenses, and you may have fixed and variable income. So for example, you may have a regular retainer with a company. When I used to do my civil engineering, I would have a retainer. As a speaker, you tend not to have that, but it might be that I've done stuff in the past where I've worked with companies and they've retained me for a period and paid me on a monthly basis. So there'll be fixed amounts, but then you can have variable amounts where you do different types of work, and that comes and goes at different levels. Same thing with your expenses. Now this is really important to break this down. A lot of people just have like 1 or 2 lines and then a big miscellaneous line. The trouble with the miscellaneous line is it's not subtle enough. It's not detailed enough. So the more you can have each row representing a different type of expense, that is a typical type of expense, you might have, say, 7, 8, 9, 10 different rows, and they all represent for that month your typical expenses, and the same thing for your income. This is incredibly valuable now, because what happens is you can take, and everybody cash flow forecasts differently. So for us, we do it on a weekly basis. basis. Some people do it on a monthly basis. It's entirely up to you. You could go quarterly, but that's not enough detail really. But let's say you did it monthly. So, you know, for month 1, January, for example, I'm recording this now in June. So you would say June, July, August, September. But let's say you start the year, January. You know what your typical income and expenses are. And then you basically have a net balance for the whole bank account. So the bank account may start at £5,000, and at the end of month 1 it goes to 7,000. In month 2 it might go to 9,500, for example. The nice thing with this is you may have certain amounts of money that you anticipate coming out. So these could be lines that represent large purchases, they'd be large expenses, or you might be expecting a bonus coming in a certain month. So in month 5 I'm going to get a bonus of 4,950, and so that suddenly tips the balance. It gives you more income that month. And what this allows you to do is look out for opportunities where you could take money to go and invest it, but equally you could use it in reverse to look at situations where you might be challenged. You might say, well, that's when we're going to get, you might have VAT going out, you've got a tax bill to pay, and so we have to plan for this. And every business will have its ups and downs, and COVID certainly has caused a lot of challenges in many ways for different businesses. So this is a very good time right now as you're coming through this period to look ahead 6, 12, 18 months and start to see if you can predict. And what I certainly find it useful for is, hi Taka, good to see, is actually identifying when we might have some hurdles, when we might have some challenges. The positive stuff is great. Okay, we're expecting a large chunk of money coming in then. Fantastic. How can I allocate that money? But I'm also looking for where I might have a challenge in terms of when money's needed. Is there a way to alleviate that? Can I move that payment back? Can I see if I can win myself some time back or whatever, or move money from A to B? So don't underestimate the power of this. And I would suggest you do it on a personal level. So you've got your personal financials over here, and on the business you do it over here. And if you're running a business properly, hopefully you're doing this with your accountant and you're making these plans anyway. But most people don't transfer the same skill and the same approach into their personal lives, and they wonder why they run into trouble. So you might say, well, give me an example. Well, for example, you've got no contingency in your personal bank account, but you've got an old washing machine that is pretty much knackered, and at the same time your central heating system isn't playing so good. Good to see you, Taka. You know that it's going to play up at some point. If you don't allow for that, if you know a central heating system with a boiler and everything might cost you £5,000-6,000, you've got to plan for that. And if at the same time the washing machine packs up at the same time, you might have a 5-6 grand bill that month, and of course you haven't allowed for that, you haven't put any money aside for it, etc. So the beauty of the process of cash flow forecasting, it allows us to go into the future with a form of a crystal ball and anticipate. So for those, and then this is a short video, but for those of you that have the opportunity and you're with us on the Growth Tribes, if you're not, go to growthtribes.com, www.growthtribes.com, and what you want to do is join the Growth Tribes to get into the vault. In the vault there is a series called Money Mastery, and in there I actually break this down. I go into details of this, and I go through, there's even spreadsheet tools and stuff you'll see me using on the videos. Very powerful, extremely practical, and it's something that I put together off the back of my whole one-day training that I used to run. Good. All right, I am going to stop there, and then what we will do is we will continue on Money Week this week. I'll either cover it tomorrow or the day after, but yeah, look out for that, and I'll see you all soon. Thanks for watching, and have an amazing evening, albeit there's only a few hours left.